Hey traders, welcome to this video on how to use the Exponential Moving Average, or simply called the EMA. Now if you're new to trading or looking to expand your knowledge, this video is perfect for you. My name is Mike Sir, and I'm here to teach you how to use a simple trading strategy that with the right approach and good risk management will help you in your trading. First, let's start off with the basics. Now you may or may not be familiar with the simple moving average indicator, or referred to as the SMA. This is the line that calculates the average price of a security over a certain period of time and appears on the chart above or below the price. The EMA is a similar indicator that is also used to track the average price of a security over a specified period of time. Now the difference is that the EMA gives more weight to recent prices, which can make it more responsive to price changes in the market. So why should you use the EMA? Well, the EMA can help you identify trends and potential entry and exit points for trades. It can also help you determine the overall direction of the market, whether it's trending up or whether it's trending down. But how do you know which EMA period to use? Well, the answer is it depends. The period that you choose will depend on your trading strategy, the market you're trading in, and your personal preference. Now, shorter time periods such as a 10 or 20-day period are often used for short-term trades, while longer periods such as 50 or 200 periods are used for long-term trades. Generally, the longer time period EMAs give more accurate signals and have less noise. Now, for example, here you can see a chart of gold where the price reacts to the 200 period EMA quite often, bouncing from the line almost every time. Now that we know the basics of the EMA and its advantages over the SMA, let me share with you the Exponential Moving Average trading strategy. This popular strategy involves using two EMAs, such as the 10 EMA with the 20 EMA, or the 50 EMA or with the 200 EMA. Now when the shorter time period EMA crosses above the longer EMA, this can signal a potential buy opportunity and is often referred to as a golden cross. Now when the shorter period EMA crosses below the longer EMA, this can signal a potential sell opportunity and is often referred to as a death cross. Now you can experiment with different time periods to see what combination of EMAs work for you. To set up the EMAs in MetaTrader, open up a chart of any security and simply select the EMA indicator and enter the two periods that you wish to use. Now you can customize the color and thickness of each line for easier visibility. Once you plotted your two EMAs on your chart, you just need to wait for an EMA crossover. And the EMA crossover occurs when the shorter term EMA crosses above or below the longer term EMA. A bullish EMA crossover happens when the shorter term EMA crosses above the longer term EMA, while a bearish crossover happens when the shorter term EMA crosses below the longer term EMA. Now it's important to note that the EMA strategy is not foolproof and should be used in conjunction with other technical and fundamental analysis tools. Also, you must set your stop loss on every trade. This will minimize potential losses and protect your trading account. Now let me show you two examples of this trading strategy. Here's a chart of the Euro versus US dollar where we decide to use the 50 EMA, which is the red line, along with the 200 EMA, which is the black line. You can see here that the 50 EMA red line crossed below the 200 EMA black line, indicating a sell signal. We would then place a sell order immediately at 1.18900 and place our stop loss order above the recent highs, which is at 1.19700. Our take profit level will be at least twice our stop loss, which would indicate at 1.17300. Once the price goes in our favor, we can choose to move the stop loss to break even to protect our capital. Now, as you can see, the price reached our take profit level and we exited our position with a nice profit. As mentioned, this strategy is not 100% foolproof, and hence why you should always manage your risk on every single trade. Now here you can see with the same chart of the Euro versus USD, where the 50 EMA, which is the red line, crossed above the 200 EMA black line, indicating a buy signal. We would then place a buy order immediately at 1.12900 and place our stop loss order below the recent lows, which is at 1.12200. Our take profit level will be at least twice our stop loss level, which would be at 1.14300. As you can see, the price never reached our take profit level and fell, reaching our stop loss level. Now that we've discussed the basic EMA strategy, let's take a look at some additional features that can help you make better trading decisions. First, it's important to keep an eye on the overall market trend. Now use a higher time frame chart, such as a daily or weekly chart, to determine the overall direction of the market. Then use the EMA crossover strategy on the lower time frame chart to enter trades in the direction of the trend. Now this can increase your chances of success. Secondly, it's important to set stop loss orders to manage your risk. Now you can set your stop loss order below the most recent swing low in a long position or above the most recent swing high in a short position. Now this way you can limit your potential losses in case the market moves against you. Finally, always remember to use proper risk management techniques. This includes setting realistic profit targets and sticking to them, as well as using appropriate position sizing based on your account size and risk tolerance. Now, by using the EMA crossover and other additional features that I've discussed, you can improve your trading skills and make more profitable trades. Good luck and happy trading!